Good morning, everyone. I am Keshav from PIBM. So, today I will present the topic Understanding Rural Credit Poverty, which is an important issue in rural development and microfinance. So, rural credit poverty refers to a situation where rural households do not get timely, affordable, and the adequate access to credit. Because of the lack of credit, families are forced into low productivity work and often fall into high interest debt traps. So it is an important point to understand is that credit poverty is different from income poverty. Even families who earn some income may still suffer if they cannot access formal loans from bank or institutions. So therefore, understanding rural credit poverty is essential for designing effective microfinance program, financial inclusion policies, and the poverty reduction strategies. So now start with types of credit poverty. So the first type is the chronic credit poverty, which means long-term and persistent exclusion from formal credit institutions. So this problem is commonly seen amongst the landless laborers and the scheduled caste or scheduled tribes households, who usually do not own assets that bank accept as collateral. So two major causes are the first one is a lack of collateral and the second is the low financial literacy, meaning that people are unaware of banking procedures and the loan schemes. As a result, these households depend on an informal money lenders who charge very high interest rate and keeping them trapped in poverty and low income activities. So without proper intervention, this becomes a cycle of exclusion, which where no credit leads to no assets, and no assets again prevent access to credit. Now, next we talk about the second type of transitory or seasonal credit poverty. So, unlike chronic poverty, this is temporary and happens due to certain problems. For example, crop failures, health emergencies, or the seasonal gaps in income can create an immediate need for money. So, during such times, families often borrow from local money lenders at very high interest rates. However, these households usually have productive capacity. If they receive timely and affordable institution credit, they can recover quickly. So, transitory credit poverty highlights the importance of the quick and the flexible rural lending system. Now, next we have the structural credit poverty, which is caused not by individuals but by institutional barriers. So, this include long distance to bank branches, complicated loan procedures, and the strict documentation or eligibility rules that ignore rural realities. So, because of this systematic problems, many deserving rural families remain excluded from the formal finances. So, another important dimensions is gender-based credit poverty. Women often do not own property, may lack identity documents, and usually have limited decision-making power in the households. So, to solve this, microfinance institutions and self-help groups focus especially on the women, providing small loans, group lending models, and the financial educations. So, this has shown strong positive impact on women's empowerment and the rural livelihoods. So, if I talk more about the structural credit poverty, it is basically arises from the institutional failures that systematically impede rural population from credit access. Like there is geographical barriers, and then there is a procedural complexity, like overly complex application procedures and rigid documentation requirements. The third one is the standardized eligibility. It means the standardized lending criteria ignoring heterogeneous rural circumstances. So, to conclude, rural credit poverty, it is a multidimensional problem that includes chronic exclusions, temporary seasonal shortages, structural institutional barriers, and the gender-based inequalities. So, addressing this issue requires policy reforms such as expanding rural banking access, simplifying the loan procedures, like providing flexible lending and strengthening the microfinance and the self-help groups. So reducing rural credit poverty is essential for the financial inclusion, poverty reductions, and the sustainable rural development in India. Thank you.